part of a very good story for Home Depot right now with the earnings and revenue beating estimates. Thank you very much, Cheryl Casoni. And joining me right now to react is Labenthal Global Advisors President Dominick Tavella. Also joining the conversation all morning long this morning is Payne Capital Management President Ryan Payne and former Home Depot CEO Bob Nardelli. Great to see everybody this morning. Thank you so much for being here. And Bob Nardelli, I want to kick this conversation off with you on these Home Depot earnings. The dividend increase, the same-store sales number looks good. You're obviously a shareholder of Home Depot. You were the chairman and CEO for so many years. What's your take on this quarterly report from Home Depot?
Good morning. Thanks for having me on today. Look, I think Home Depot just continues to perform exceedingly well. The management team in place, the announcement of Ted Decker, taking over for Craig Menear. I remember hiring Ted in 2001, and he'll do a phenomenal job. If you look at the earnings per share and the revenue, the favorable leverage there, you got a 30-point gain in earnings per share, another 13-14% in revenue, 150 billion. Just a phenomenal job of execution. If you look at the same-store sales, again, a very positive thing. Maria, I think what's happening here, if you look at the housing market, the existing housing market and the demand, two things happen from my experience. People getting ready to sell their home, want to invest in it. The agent will tell them, clean it up, put a more common paint up, put new rugs, new carpeting, etc. Yeah. And then the person that buys the home goes in and does the same thing. So I think we're going to continue to see very strong performance out of home improvement and Home Depot. We'll see what happens with Marvin Ellison tomorrow with Lowe's, but I think very strong, good performance. That dividend increase is phenomenal for shareholders.
Yeah, it really is. And I want to ask you more about the broader housing market coming up in the program as the Federal Reserve starts to raise interest rates this year, and whether or not that's having an impact, because we did see a negative number last week in terms of home sales. So we'll get back to that. But Dominick Tavella, so much happening this morning for you to react to and our investor portfolios out there this morning. Russia, obviously, sending troops into eastern Ukraine, calling it peacekeeping troops. Your thoughts on this wild reaction? The Dow was down 600 points earlier. We're looking at a decline of 70 points right now.
Yeah, I think the markets are hoping that Putin does stop just in eastern Ukraine and that doesn't become a full-blown invasion. I'm not sure about that, Maria. In fact, we got more conservative last week. We took a little money off the table, and ironically, we took it off our international positions. I think if this is full-blown invasion, if sanctions get imposed by the U.S. and the allies, energy itself is going to be a big component of that. Europe is not going to do well with substantially higher energy prices. I think the global economic impact would be substantial, at least in the short term over the next couple of months. So I think this is a time to be a little bit prudent, a little bit careful with your allocation.
Well, we're looking at oil right now. Crude oil's up 4.25%. That's at 94.90. But look at Brent. Brent also higher, hovering around $98 a barrel on Brent. Earlier, it reached $99. That was the highest level since 2014. Dominick, if you look at the price of oil, you've got two different scenarios. Number one, higher oil prices certainly cut into consumer spending and disposable income when you've got to pay more for things like gasoline. On the other hand, energy has been a great performer for investors, one of the best places to be in the last year or so in this market. How do you want to play energy with Putin now moving troops into these two areas of Ukraine?
I think you were spot on with the consumer, Maria. Brian Moynihan of Bank of America just stated that credit card and debit card sales were up over 17% over a year ago. The consumer wants to spend. The consumer's out there. They have excess capital in their pocket. They want to put that money to work. But energy prices go substantially higher. They're going to start pulling back on that. We saw terrific numbers at a Home Depot. Obviously, consumers are going there and spending money, but the cost of goods, energy is the lifeline of our economy. The cost of goods goes substantially higher. At some point, the consumer is going to go, enough. I'm not willing to do it anymore. So this is significant. I think this could have dramatic economic impact going forward.
Yeah. All right. We're going to keep following this because, of course, as the price of oil rises, the expectations for global growth come down. Dominic, it's good to see you this morning.
Exactly.
Thanks
right.
very much. Dominick Tavella joining us on
Thank
markets,
you, Maria.
Russia, Home Depot, all of the above. Busy morning. We are just getting started this morning. Coming up, we are talking about the global disruption potential all morning long this morning, what it means for the United States as President Putin orders Russian troops to move into separatist regions of Ukraine. Don't miss a moment of it. We're talking with General Jack Keane on the other side of this. You're watching Mornings with Maria, live on Fox Business.